Okay, so I'll doing my talk. I was thinking the whole time about like what will be the digital tomorrow, and it's actually my topic. I think you know who I am. Yeah, I'm the founder of Distribute Lab, and we are focused on infrastructure for the future. And our core mission is to build financial internet. So that's what we want to do. When all accounting systems will be able to talk to each other. And what it means, I'll talk a little bit later. So my plan is first to approach the question of utility and security tokens very briefly. Then the benefits of tokenization, environment for security tokens, and then practical considerations of what it means for the real business. So the first thing is that like you probably know that I'm like probably the most anti-utility token person in the world, and I always come up with yeah, I know that it's not the best idea here, but anyway. So the question that bothered me for a long time, like why utility token is always growing in price. And when I found the white paper of Binance, I understood that's all. And that looked to me that, okay, now any business can apply the model of Binance and do an ICO and have a token, and this token will make sense and it will always grow in value. And now like you see the media trying to compare Bitcoin with Binance token. Even like CoinDesk had an article recently like said like while Bitcoin is dropping, Binance token is going up. It's like, and that's obviously bullshit because you cannot compare cryptocurrency with an artificial financial instrument that was designed to grow. And that's like CoinMarketCap is doing a bad job because they're mixing together real cryptocurrencies and then digital assets and then like some financial instruments again that are not really assets at all, and they're calculating the total cap and trying to analyze whether it's going up and down, and that's like it will produce a lot of bad results. So the idea here is that imagine that Apple would give you a 50% discount for an iPhone if you pay with an Apple stock. So what would happen with an Apple stock? Obviously, it will go only up because people will rush to buy these stocks in order to get discounts for an iPhone, and then Apple will benefit from the appreciation of the total, like their market cap, and this money will be spent to sponsor this discount. So it can ride until they decide to close the shop and just run out with money. And with this way, you can apply the token to any, even to like kebab kiosk or in a coffee machine, etc. So that's possible. And if you just say that that utility token is a security, it won't really help, because again, for the previous reason, nobody would want for such instruments to exist. So the biggest problem with utility token is that people don't understand what they're buying. Like on the post-Soviet space, we had this MMM Ponzi scheme, but people understood what they were buying in 2011 because Mavrodi came for the second time and said, like, fine, I mean, let's try it once again. Let's, have fun, and whoever is the first will take some money. But if you just name one thing with another name, that's a bad idea. So it won't help. And a few thoughts about tokenization. So basically, tokenization is a very simple thing. It's the way how you transform accounting systems. And these accounting systems become fully digital, and the key difference is that you start to manage your assets with a cryptographic key. So imagine before paper existed, before writing existed, people just counted in their like heads, and then they started to write down the numbers. Then digital era came, and then they started to fill the databases in Excel sheets, and now the new era is coming, and this new era uses cryptography for every operation, there is no exception. So, and obviously all accounts will be managed also with keys, and it means that we have to have tools to manage digital identity, and privacy and digital identity is obviously the key. But the token itself is a very simple thing. The token is just the representation of an asset. But tokenization allows you to achieve transparency of your business without compromising its security. So just imagine, before Bitcoin appeared, there was no reason for government to open their registries because it was considered unsecure. How would you do that? I mean, and when Bitcoin appeared, everybody saw that Right now, you have a database fully available on the internet, fully transparent. There is no need in firewalls, armed guys, like anything, security, because it's transparent, because it uses cryptography and consensus, and that's the breakthrough for the entire like industry, and not only public sector but the private sector. And the second thing is that you can actually automate relationships between businesses, between people. Before that, you were only able to know what is truth right now. But when you have blockchain, you know what was the truth before. And with smart contracts, you know what will be the future, what will be the truth in the future. And that's all about automation. Now you know that you can be certain about certain facts. So that's a good question. And Michael touched it a little bit, that our currencies are still trust-based. And some currencies are like achieve full privacy. And I think these two edge of the scale will exist. And it's actually not a bad thing. So I anticipate that the creation of a global currency, fully anonymous, like fully private, fully censorship resistant, and you cannot cheat with that. I mean, you cannot really apply, you cannot even know who paid to you. On the other side, you will have like trust-based assets, like physical assets, your reputation, credit, where you need to know whom you are transacting with. And it's, in this case, obviously kind of a censorship can apply. It's like, but this censorship is not the true, like that censorship that people are fearing. It's like if you live in a house and you did some bad things to your like neighbors, the neighbors will push you from this house or from your village or from the town. That happened for like the whole history. And that's the opposite side of the trust-based community where everybody is benefiting from the rest. And the problem with the global private asset or currency is that theft can happen. You cannot steal reputation. It's impossible. In the world where everybody is like in a trust net, you cannot steal money because money is trust. It's about like credit, how much you like owe. And in the world, like Bitcoin showed an example that if it's a global private currency, you can steal it and you cannot really take it back from this like thief. So that's the problem. But so these systems, they fit social relationships, and this system fit like fully automated relationships. And when we see that changes in consensus or in blockchain, like what Vitalik introduced after the DAO fork, it's about social relationships. When people see, okay, we need to change the rules because something went wrong. And obviously, in order for systems to develop, they need to be changed all the time. And it's based on social relationship, not on some anonymous like things, because there is no reputation in fully anonymous system. So, like as I said, we are focused right now on the creation of these systems. So we believe in this too, but we focus on that. So tokenization is about digitization of all assets that matter to people, like real estate, money, stocks, etc. And they have to become fully digital. And it means that the environment is different from the systems that are based on full anonymity. So you cannot really apply all Bitcoin principles to tokenization because they don't need to be censorship resistant. So, and like most of the talks and most of the people in this room, they believe in a fully censorship resistant future, private, etc. But there are still a lot of businesses that just need simple systems. Like it's not that simple, but anyway, like such as a warehouse. And the warehouse needs to operate with the warehouse receipts, and they know their customers, and the customers should be able to exchange them and then sell them, and or maybe crowdfund or whatever. And all users are known. Custody is there because there is something physical. The receipt without the resource underneath is worth nothing. So the issuer of these receipts or like this warehouse is trusted, obviously. But the trust is not global because if I'm a farmer and I bring my harvest to this particular warehouse, I trust this particular warehouse. If I don't trust them, I don't bring my like harvest there. It's like you just select whom you trust. But this has to be digital. And when we introduce digital systems, we have problems, and they are mostly like related to digital identity, key management, and if it's about consortium-based system, then obviously how do you resolve problems? And the physical custody will always be a problem. You cannot solve it with the technology. And when people right now are talking about tokenization, they kind of touch only a few aspects of it. So if you think about tokenization in general, it's not very clear. So it's about internal business processes. How do you transform them? How do you do accounting of assets? Then how do you do integrations, and only then trading, and then derivatives? So right now, all these platforms like Securitize, Harbor, etc., they're talking about this piece. How do you issue assets, and how do you like trade them, and nothing more. But the tokenization, in reality, that has to start from the bottom. Like, how do you really transform your business? How do you make it transparent and secure? So this is like a statement that real assets, they cannot be issued on public permissionless blockchain. One of the reasons is because when economy is real, assets are real, regulation is real. But the bigger problem is that permissionless blockchains, they use proof of work, proof of stake. They cannot use PBFT, for example. And the problem of double spending is very likely. Because imagine that right now Ethereum worth $50 billion. Let's say they switch to Casper, and like $10 billion will be involved into proof of stake. And then on top of Ethereum, like 1 trillion of assets will be issued. Like many ICOs project that. And imagine that now, in order to change ownership of this trillion of assets, you have to just spend like 30% or 50% from the stake size, which will be 5 billion. So it's indeed a problem. And with proof of work, the same story. Like recently we had double spendings in like Zencash and other currencies. Even in Bitcoin, you rent the equipment for an hour. It obviously costs a lot of money, but if you issue on top, then it becomes like really interesting. So, and it's still, it will be fully anonymous. So real businesses cannot accept this risk, for sure, because they need to like evaluate it, and you cannot really evaluate it. And other issues will be security updates, forks, through output, and legal responsibility. What if these validators are bad? Like, and bad is like obviously it's nothing, absolutely bad, but who knows? Yeah. So there are many issues, and I believe that real assets will be tokenized on so-called like private blockchains. They could be. I don't like word private in this case because these blockchains can be public but permissioned. So like right now even with EOS, everybody knows who these validators are, and it's already technically kind of semi-permissioned. So we will see like a hybrid system which is fully transparent, but it's not censorship resistant. And I think it's not a bad idea. One second. Yeah, one example how it could work. So I provide this example very often. Imagine a game which can become decentralized. So every device becomes a server and runs its own like blockchain. So the players of the game maintain their resources, their like game objects in this blockchain, and they like exchange information. So it's a decentralized game. And players, when they exchange things, they pay a small fee, which goes to the creator of the game. So this is the account of the creator. So exactly like Zcash works. So when you mine, you like technically pay a fee. It's like a tax. And then the creator of the game benefits from exchanging the internal currency to dollar on exchange. Again, it's not a new thing. It's already possible. So that's the new business model. And then if the creator introduces a special token, which will be a security token, which pays dividends to all investors of the game, but dividends will be paid in what? In internal currency, which is the digital gold. It could be even pegged to dollar, it doesn't really matter. So in this case, it's like a stock, and this is like a tax office that distributes money to stockholders. And obviously investors see that how much they will earn if the GDP of the game will grow. So obviously creator of the game is interested to like increase number of users, but creator of the game doesn't need to increase the value of this currency. because like no country wants its currency to grow indefinitely. It's a bad idea for economy, but it wants to increase the GDP and then obviously redistribute more to investors. So why game? Because it's a closed economy, it's easy to show, and there is no import and export. And what I wanted to say is that this will be fully transparent business and a fully transparent business model. So that's how the real business is transformed, not just the trading component of it. Because many, again, projects that aim to trade certain liquid asset, but just trading doesn't fully help. It helps, but not fully. And if you transform everything, this really helps. So, and obviously this token, like security token is considered, has a few components, like an ownership piece, a cash flow piece, and a governance piece. And they will be separated. And then you can sell them separately again. Like you can sell land, you can rent this land to build a hotel, you can then rent hotel to people, then you can hire management and they will be paid according to their decisions. And that will be possible because of better tuned processes. And then, so a few more thoughts about why do we need this infrastructure? And with what kind of infrastructure? So imagine you have a management company for a hotel or for a business center. And they obviously need automation of their business processes. They need accounting. They need maybe crowdfunding to extend their business. They need auctions. They need exchange. They need any storage of the users, etc. So all this infrastructure has to be in U1 when we enter a fully digital era. So that's actually what we are doing in Distributed Lab. We are creating this infrastructure for businesses that need to transform their internal processes. And it looks like people often compare intranets with internets, and they say intranets are bad, internets are good, but internet cannot exist without intranet. There is no global router up in the sky which we connected all of them. We have these Wi-Fi routers that inside the company, inside the hotel, and if internet breaks, then the applications can still operate within the company, all these accounting systems. And then if they're connected, they constitute internet. So it's not either public or private or permissioned or etc. It's about how do you build an internet from the ground. So I think we should start from building these intranets that benefit business right now, but using open protocols that can be connected to each other, the systems. And the last slide is about on the last BIP I mentioned why is it different from this fully centralized approach or centralized database. Why can't we use a centralized database for a business just to do all of these things like crowdfunding and auctions and trading? And there are a couple of reasons, and most of them are related to security. And security obviously allows you to achieve transparency because only secure system can be transparent. And then security reduces costs. So again, it's all about costs. And the key benefits are that system that is built using blockchain principles, they become audible, they have integrity, robustness, which increases uptime of the system itself, non-repudiation, etc. So these are features. You can obviously build them with traditional technology, but then you reinvent blockchain. And obviously, without consensus, you cannot do much if you want to do a consortium thing. So it's all about infrastructure. That's what we believe, that the new world will require a new infrastructure. The final thought is that actually it's like an outcome. Right now people are talking about a lot about new asset classes. But technically Bitcoin is it's a commodity or currency, but kind of digital commodity. But still commodity. And the crypto itself, or cryptography, helps to build systems that use a new way to manage existing assets, which could be stocks, bonds, money, etc. But the way of management is different. So that's where crypto will make a bigger impact. And decentralization is the component of transparency and security. It's how do you ensure that everybody agrees to the state of the system. So that's our belief that this is the key thing for the whole new world. Thank you very much, and I'm ready to take questions.
Thanks very much, Pavel. I'm interested, if I understood correctly the way you described it, you see a world in which there's a whole number of unique, use case specific, semi-permissioned or semi-centralized systems, which are sort of like these private blockchains. And then maybe they come together in much the same way that, you know, people today, even large companies, at any given location, they're communicating over their own network. But when they want to communicate with, you know, the New York office, they communicate over the internet. So you see an interoperability layer, which is maybe the public or permissionless layer. And I'm curious if that's your thinking, and if so, what do you see as the interoperability layer? What would that look like?
Actually, no, I don't think it will be like that, because there is no such thing here as a public or private on the internet. It's just connections between this guy knows this guy, and then that IP address, MAC address, etc. So they just pass information through. And in this financial internet, they apply. Why do you need consensus? To reconcile, to sign, to achieve integrity, non-repudiation. So the only difference between internet and financial internet would be the way how you protect data in between, and how to reconcile. So I don't think the public or private should be even compared. I don't even think that we should articulate the word blockchain as a foundation for that. We should come from the goal, and the goal is obviously global communication of value, and the blockchain is the mechanism to reconcile between certain parties, and only parties who are involved in a transaction should reach this reconciliation, not everybody. So I would just think in a different terms.
From the ownership perspective, how do you see who's going to own those systems, who's going to provide the support, and how are we going to have this kind of more of a shared distribution of ownership support, or do we going to have a centralized, same companies providing IBM, the value chain distributed network? Or
I think it was the same story as with internet. When you have Apache, Nginx, whatever, everything open source, but you also have Red Hat, you have IBM, you have Microsoft, who sells the same functionality but for money, because they provide you with support and guarantees and trust, etc. So it's a combination of things, but the system it's not owned by anybody. It shouldn't be. It's like the closest comparison would be email. Anybody can run an email server and be a part of the network. You just don't need to reach consensus, right? So in this world, you need to reach consensus. But with email, you just send it through, etc. But if you apply Web of Trust principles, then it's still secure.
Yeah, I've just so basically every entity or company having its sort of tokenized, business process, and the business model reinvented in a tokenized system. How do they interact with each other on a business level? Simply, not the question even related to the channels.
Okay, I would say there are a few ways. First is correspondent accounts, the way how people are interacted for thousands of years. Your business has an account in my business, and me in yours, and based on trust. The second way is that imagine that I'm the user, and we are two with Andrei, right? And I have gold, and he has tomatoes. So he has an account in a tomato warehouse, right? And then I have an account in a gold warehouse, and now we want to exchange things. So obviously he will send me tomatoes, token represent a receipt for tomatoes, and these tomatoes will be still in the warehouse. So I will be opening an account in a tomato warehouse, and he will be opening an account immediately in the gold warehouse, right? So technically, these two warehouses don't need to know about each other at all. It's like right now when you sell real estate, the real estate transaction goes into real estate registry, and the money transaction is like cash or money. They don't know about each other at all.
But there's equivalent, right?
There's what?
Equivalent. There's one house costing $1 million.
But that's our agreement. The systems don't know about our agreement. They may know, they may not, but in a simple case, they don't know. So that's the second way. You just have wallet that can be connected to any account in system and doesn't need to know.
Correct. So eventually there is a market over gold and tomatoes,
Exactly, yeah.
and that will be like what? Like a decentralized exchange? What is that?
I think it doesn't really matter decentralized or centralized. It's just up to the users. If he likes decentralized, I like centralized, we will never meet, right? Or do we need like somebody who is in between? But if we both trust one exchange, like Mount Gox, then we can happily exchange our assets. The last, I think, yeah. Juliana Buster.
Oh, can you please open a slide with censorship and theft?
Yeah.
Do you try to think about it's the same problem because theft censorship resistant is sort of theft because if you cannot
Taxation is theft, right?
yes, but it's not only about taxation because if we think about censorship, if you cannot send your money or your assets to another person, it's theft because you cannot use it.
Honestly, I haven't thought about that. That's an interesting idea. But in a like just real application, you don't know the thief, and there you know like who is like trying to prevent your transaction. So it's more about social relationships, and these are anti-social relationships, right? So
Whenever people say censorship resistance, I always ask about child porn.
what about it?
What's going to prevent it?
I don't know. It's like it's not a topic of my interest now. Yeah. I don't have kids, so maybe. Yeah. Like these recent things with links to child porn and Bitcoin blockchain obviously show the issue because you cannot delete the state of the database, and now if you're a miner and you store them, you're technically the distributor, right? So I don't know if there are any legal solutions to that. So it's about again social relationships, how society behaves with elements that it doesn't accept. Just I don't have an answer. If anybody has an answer, let's discuss over the lunch. Yeah. Okay.